Thank you very much for the warm welcome, and thank you everyone for joining. Before I start the discussion with our panel, uh, let me just ask all our panelists, starting with James, if he can introduce themselves in like say 30 seconds, and then we can move on.
Certainly. First of all, a very good afternoon, everyone. My name is James. I'm the head of market research and market analysis at OneRoyal. Now, I've been in the industry for 20 years. In particular, I am a commodity broker. In particular, I love gold. It's nice, shiny, and beautiful. And let's face it, it's been very fun over the last couple of weeks. But anyway, that's me in a nutshell in 30 seconds. Is that enough?
Yeah, that's fine. Bentley, to you.
Hi, yes, James Bentley. I run a trading academy in London. We also have a live trading floor here in Dubai. We run a variety of trader training programs from a beginner to a very, very advanced level, accredited, UK government-backed, KHDA approved out here. And yeah, we open the doors to anyone interested in learning how to trade.
Perfect. Ahmed.
Lovely. My name is Ahmed Tahsin. I'm an ISCA certified financial influencer. I run Tahsin Investments & Co. And we help investors navigate through the markets using AI trading strategies with us through copy trading solutions, PAM solutions, and we've been operating for the last 6 years, and our track record has been verified by external auditors for the last 6 years as well. Yeah.
Perfect. Thank you very much for the introduction. For me, my name is Younus. I'm the CFO of AlFadhili Housing, based in Saudi Arabia. Mainly we deal in the real estate, and on a personal level, definitely I'm a trader as well. So that's why they asked me to start this session. So to start with, I'll start with Bentley, just to start with. We're hearing a lot in the market nowadays about trading bots, that the bots are available for trading. Now, if I take this, if these bots can really help traders to be a discipline in the market, and especially the recent market being so volatile. So what do you take on that?
Yeah, I think obviously with trading there's huge emotions involved. So if you're into AI and you have a bot that works, you're going to understand your success rate. And as trading is one big game of probabilities, you have to trust the success rate and go with it. And when the market is busy and volatile, you're going to have a system that's working for you with no emotions attached, and you're not attracted to momentum or greed if something's really kicking on like gold has been. So you just have to understand the success rate of the bot and just trust the probability of it winning.
Perfect. Ahmed, you want to add anything on that?
Yeah. One thing that needs to be absolutely clear, adding to what James just said. Now, 70 to 80% of the trading market is controlled by algorithms. Algorithms they don't sleep, they don't know fear, they don't know greed, they haven't got no emotions, they're disciplined. And they punish human traders' egos faster than they think. So every time you hesitate a trade, or you enter a trade based on greed or fear, the market will punish you faster than anything else. Why? Because the market now is controlled by algorithms. Now the question is, can you beat these algorithms? That's not the question. The actual question is, when will you lose? Well, like one thing when I started trading, I was always used to ask myself, why do people lose? And I think if I found the answer of why people lose, then I can know how can I stay consistent, how I can have a chance to beat the markets. And when I realized the market is all run by machines and algorithms, that's when you got to change your approach to the market. So trading bots are fantastic, they're great, they're disciplined, they don't operate on zero emotions, but you got to understand something. Trading bots, they've got a big myth about them. They don't make you fast. It's not like AI trading. It's not like a button you press today and it makes you rich tomorrow, boom. No, that's absolutely not the case. The other myth is AI predicts the market. AI never loses. That's absolutely false. What AI does, it's, process a fast amount of data, faster, and execute based on decisions and based on technical fundamentals inputs, unlike humans, where they run by emotions, by greeds and fear, and so on.
Perfect. Thank you very much, Ahmed, to that. Now, just to pick up from you, and I'll come to James now. Just mentioned that market punish you also sometime if you try to be too greedy onto that. Now, there come the stop loss. Now, these stop loss are sometimes good to I think the way I believe as a trader, we should have a stop loss always in place, unless you are very, very confident on that. But market can always go any direction they want to. But is it like, just to help, like stop loss can reduce your losses, but in what scenario we should be using the stop losses, and what it cannot prevent us for if you use the stop losses?
Okay, like I say, so your question is when we should use a stop loss.
And what it cannot prevent.
And what it can. Well, first of all, in my personal opinion, I don't know if the panel agrees with me, we should always have a stop loss in place. In fact, we should have the stop loss in mind before we even go into the market. Like I say, stop losses sometimes are more important, I would say, than guessing where the actual direction of the market's going to go. Why? Because we can practically control the stop loss to a certain extent, more than we can control the direction of the market. Now, the way where stop losses do not work is on times of high volatility, the fill on that stop loss may be different from the predetermined rate you put in. So it's not a foolproof plan. It's just a way of controlling some of your loss. Stop losses don't stop trades from losing. They're there as a safety net to catch you to a certain extent and hopefully not wipe out your portfolio.
Okay. Now just to, as James started and said, we should have stop losses always. Anybody wants to disagree onto that?
No, absolutely right. Spot on, James. You know, stop loss, like knowing how much you might lose before you enter a trade, it prepares you emotionally. So let's say now if I'm about to buy gold or sell gold, I know exactly how much I might lose in that trade. And if my stop loss hits, I know it. I'm mentally prepared. So that kind of make you more disciplined, not emotionally revenge trading and whatnot, you know. And speaking of stop loss, you know, the market has been ridiculous the last couple of years since Mr. Trump came back to the to the office. So a lot of traders been getting stopped out.
Now, in connection with that, I comes to Bentley now. When traders should be relying, like automation is always there. You can say that automation is always there. What do you think? Like, again, not a very easy question to answer, but in a way that when is the time when trader try to move from an automation to a manual trading? What do you think on that?
I think that's down to the trader. It's not a case of today I'm going to trade automated and tomorrow I'll trade manual. It's whatever suits their preferences. Just to add on to the last point as well, I think before you take a trade, your stop loss needs to be a predetermined percentage, which is typically 1% for a new trader. So that would be your safety net that you can look at taking new trades. In regards of automation, I think if you wanted to have the ability to swap between the two, you're better off having one account that's automated and then one account that you can trade manually, catch momentum, do what it is you need to do. But again, it's going back to probabilities and success rate. If your bot works 7 out of 10 times, then if you interfere with that, you're going to damage your success rate.
Yeah, and just a point I want to add. We'll say, James, like as a trader, you should never risk more than 1 to 2% per trade. That way, if you lose 2, 3, 5, 6, 7 trades, you still have a chance to recover way easy. So never lose more than 1 to 2% per trade. And another point that just came in my mind, we got to make it very clear. There is a lot of bot trading systems that they're not smart. So we got to differentiate intelligence from automation. So not everything that's automated is actually intelligent. So you've heard so many stories before where people like been using trading bots and they have lost literally everything because they've got the wrong strategies customized into these bots, such as martingale, grid systems, and hedging loops. And I can explain to that more if Anis allows me.
No, definitely. Now on to that. Now, as you start the automation part, Ahmed, I just want to ask you a very straight question. We usually comes to all the new traders who can see the AI is coming. So I will strictly read this question as is. How can AI help traders decide how much to invest in a trade? Is it what AI can do?
Not really. Like the other day, I had someone DMing me, asking me, by the way, I've asked ChatGPT if I invest $200 using a compounding strategy, I can be a millionaire in a couple of months. I was like, all right, mate, here's $200. Try and chat to me in 2 months' time. It doesn't work like that. AI didn't come to replace the human minds. It's a tool to help us invest better, manage risk better, and help us navigate challenging markets. And you gotta understand, a lot of AI trading bots, they don't work for every market. So now with Trump, you've got the trend line markets, as you've seen now in gold, right, since 2023. Gold has been on this tremendous run, right? It's like going on this trend. So a lot of AI trading, a lot of AI bots got stopped out. They cannot survive the markets anymore. So you've got to understand, distinguish it, if this AI trading bots can work in this market, because markets change in nature. One day you've got the trend line markets, one day you've got the ranging pounds markets, and I have never seen a trading bots that can operate on both, you know?
Thank you very much, Ahmed, on to that. I'll come to James again, and I just want to ask, now traders, there are people like in the company, try to use AI into that. Now, what traders should do and should watch out when using AI to manage their position sizes? What are your thoughts on that?
Okay, well, obviously AI is the buzzword. Everybody's talking about AI. And here's the thing. Though ChatGPT and things like this nature is quite recent, as my colleague said earlier on, the industry has been using black box solutions, AI, for years to trade. So though this is new to the retail market, the big institutions have always been using this. As he rightfully said, 75% to 80% of trades by the big banks are used by black box solutions. Now, the danger of relying on such solutions and an AI in general, they're not foolproof. The reason why they're not foolproof, because they base their decisions on historical calculations, historical data. They don't necessarily react to volatility at that moment. Hence, us having flash crashes. Like everybody remember the Sterling flash crash? You remember that? After Brexit? That was down to black box solutions, not fat finger, not human error. So to answer the question, AI is useful, or these black box solutions are useful, but they are not foolproof. They won't react to that moment, that trigger of volatility at the market at that time.
Just to continue on to that, and as we're talking about a trader right now, I comes to Bentley on that. Now, as James also mentioned, AI is a buzzword. Now, as a normal trader, what do you think, based on your experience as of now, standing as of today, we don't know tomorrow, how can I leverage AI if I want to use it in my trades? In what area I can use them, and in which area, as of today, we should avoid using AI?
I think if you're completely new to trading, it depends on your personal circumstance. If you're looking to become a full-time trader, it's going to take a number of years. So if you know someone that has, like Ahmed's got here, systems that work and have a track record for many, many years, then that would be your go-to to start understanding how trades work, the market works, so you can kind of sit and watch a professional take trades daily. If that's creating a salary for you on a monthly basis or quarterly basis, then I'll definitely recommend you go and learn how to do this properly, because you're going to come across different styles. You might realize you don't like the fast-paced style of trading and you want to trade long-term, something slow and steady. So I would always suggest that you actually get your teeth stuck into this and learn, but it's going to take you a couple of years to get to some sort of consistency. So you have to grin and bear it and work hard and spend hours and hours and days actually trying to crack on how the markets operate and how you can take a small percentage out the markets every single day. But there's no harm in, while you're learning, having a system making your money work for you.
Ahmed, please, because as you mentioned, you are providing AI solutions. So how you can support the traders?
These guys, what I have just said, I'm actually glad I'm surrounded by smart, intelligent, handsome people here. So honestly, everything they've been saying is spot on. Look, just don't go on Google and try search, a trading bots. Ask yourself a question before you purchase any trading bots. If that trading bots actually make money, why are they selling it? Why are they selling it for $200, $500? Like, if you ask me, what's my trading strategy? I'm not going to tell you what's my trading strategy. I've worked on this for the last 10 years. I've built it. I customized it. Now, what James has said also, you got to know when to trade and when not to trade. So, for example, I've got a trading algo strategy that has made over 90% in 14 months with a drawdown of 7%. And guess why that happened? Because we picked and chose the days that we avoid trading. Days like CPI, NFP, when the Fed's speaking. And what we've done through these AI systems, we've built also AI bots managing these AI that execute the trades, notifying them when Trump is speaking. But sometimes, man, Trump, sometimes he comes out of the blue, he makes these impulsive tweets. But again, it's all about managing your risk, managing your portfolio well. And make sure in each AI that you use, you gotta know what's the hard equity stop loss. That way it makes you mentally prepared. So let's say if I invest in a trading bot, and I know the expected annual return is, let's say, 20, 40% a year. What's the equity hard loss? What's the maximum that I could possibly lose? And that mentally prepares you. And make sure you never move your stop loss. Because sometimes what people do who trades using AI bots, when the drawdown reaches, like, let's say they set the equity stop loss to 12%. When the drawdown reaches to 9, 10%, what they do is they move the stop loss further down, hoping that the market will come back and reverse. And that's absolutely false. You know, I guess people talk a lot about greed and hope, but I think one of the most powerful enemies to traders is hope. Hoping the market that might change, hoping that the data might comes different, hoping that Trump might tweet something that in favor to my positions. So stick to your stop loss limits, never move them, and trust the systems. But you gotta have good, solid systems. For example, in our firm, we've been building systems for the last 12 months of development, running a back-end testing for the last 10 years, making sure they can operate, stress testing them in like days like the Fed data, NFP, banking crisis. But again, the back-end testing alone is not enough, because what happened in the past might not happen again, right? Like just James said.
Please, yeah, please.
Yeah, if I can just interject on that, I completely agree with you. Absolutely every single word you just said. Because the biggest struggle, and I hope everybody agrees with me, that every trader faces is the battle of hope and fear. Hope that when you're in a losing trade, the market will come back. And fear of when you're in a winning trade, the market's going to take that little profit away. So underlining what my colleague here said, it is important to go into the market to make sure you don't fall victim to this, because hope and fear, every single trader will go through. It's going to be the mountain to climb. So, yeah, just want to add that bit.
Yeah, well said.
Perfect. Thank you. Thank you very much for that. Now, I just pick up from Ahmed, and James, I'll come to you. He mentioned about the stress testing. Now, as a trader, will this stress testing help them to prepare for the unexpected market condition, which is currently we have? We have seen that for quite some time. How you rate that stress testing is important for the trader?
Stress testing is very good at looking at if your strategy potentially can work under certain conditions. So you can go back for historical data, historical movements, to judge whether or not your strategy may work under similar conditions. Limitations, of course. This is history. If everything was history repeats itself so easy in trading, we could all do it. So it's not that easy. It's good to give you an idea of what your strategy may perform under certain conditions, but it doesn't guarantee the unexpected conditions your strategy may experience. So it's useful, but it's not foolproof.
Just a quick one as well. These unexpected decisions are always going to happen, so you can't be scared of them and not trade. You have to just roll the dice sometimes and go with it. There's fundamental news every single day. You can be aware of the big ones like NFP, CPI, when someone's speaking, parliamentary votes. It's nothing to be scared of. You just have to understand how momentum plays out throughout them and perhaps manage your trade either side of them.
Yeah, and if you manage your risk very well and never risk 1 to 2% per trade, then you haven't got nothing to be scared of. NFP, CPI, but I always like to stay out of these days. I don't like to trade news because it's like gambling. You know, it's like going to the casino and just rolling the dice on roulette. No, don't trade news. I just forgot. You know, what made me money is the days that I didn't trade. Like when I said about the trading strategy that made about 90% with a drawdown of 7%, it's because it didn't trade every day. Doesn't trade on Fridays, doesn't trade with high impact news days, and it made us more money.
Thank you very much for that. Now I'll come to Ahmed again on the last one before we go to the audience for the questions. Every trader has their own strategy for a market condition. Definitely they have to review it on a regular basis. Now we also know that there are multiple markets. Every market has their own strategy, and there is a way to deal those markets. How often traders should be reviewing their strategies based on the market condition or based on the market itself?
Based on market conditions, like I said, market changes in nature every day, you know. Trump might change his mind. One day he want to impose tariffs. The next day is like, oh no. And, you know, you just got to roll with the punches and always review your strategy and be the biggest critic. When you lose in a trade, don't blame Trump. Don't blame the market. Don't blame Jerome Powell. You know, it's easy to blame somebody else. You might even blame your wife for stressing you out early on that day. Just don't blame anybody. Be your biggest critic. Ask yourself, why did I lose that trade? Was my stop loss too tight? Did I enter that trade based on emotions or based on real data? And here comes AI trading. It has so many benefits, like, you know, it can process a vast amount of data, analyze the market, give you a clear market direction, and also it works 24/7 without a break. Humans sleep, AI don't. They work around the clock. But if they manage correctly, they can, I promise you, they can be one of the most powerful tools to apply to your trading.
Perfect. Before I come to the audience for a Q&A, you can start. Just a brief sum of whatever we have discussed. If I come one by one, starting with James, that what you suggest to a trader in a current market condition, how they manage their risks and their expectations.
So how to manage their risk and expectation?
I'll be millionaire in a day.
Yeah.
That's expectation. But what are the risks then?
Okay. Well, I mentioned beforehand that you should have a predetermined stop loss before you go into the market. Now, I'm of the belief, as well as having a predetermined stop loss before you go into the market, you have a predetermined take profit as well. Now, I have always had the rule of thumb, and I've always suggested that you make your decisions, i.e. entry level, target, stop loss, obviously the reasons behind your decision as well, so you monitor that, and you set all those conditions before you click trade now. That way, by foregoing into the market, you know where your risk is and you can manage your expectations as well. Again, the whole point of trading using AI and things like this is best to try and take the emotions out of your trading decisions. By doing that, you can meet your expectations and also cover your exposure.
Just to summarize this, I think one bit of advice, whatever decision you decide to make moving forward from today, is just keep it simple. With trading, basics works. If you try to overcomplicate it, or you're having 3 or 4 bots running at once to try and hit 100% growth, it's just not going to happen. So just keep it easy, keep it simple. But it's very, very important that you all actually go and learn how to trade in the foundations of the financial markets, whatever route you decide to take from here, whether it's manual trading and finding a system that suits you around your lifestyle, around your employment, that's not going to cause stress. Or if you want to go down the automated route, I mean, there's a lot of people with experience here, so have a chat with someone and work out what's best for you. But as I say, just keep it simple. It's the only way this industry can work.
Ahmed, you want to add anything?
No, like James said, just keep it simple. There is so many options out there in the market, but just picking the right one with proven track records and proving data and history. And you got to focus on, don't get caught away about returns, because there's a lot of trading AI, right, bots that they can make 20, 30%. But I promise you, within 2, 3, 4 months, your account is going to be wiped out completely and game over for you. Just look for steady and consistent AI trading bots. Ask about their history, their data, things like Sharpe ratio, maximum drawdown, and see the results yourself before you start investing in these systems. And like I said at the start of this panel, AI didn't come here to make us richer. It came to make us more disciplined, to make us more precise, and help us navigate market conditions without emotions and be more disciplined. That's it.
Perfect. Thank you. Thank you very much. Before I will conclude the session, is any questions from the audience? Yeah.
Hello, everyone. Well, I have a question with Ahmed. First of all, I want to know as a trader, okay? Some people, they give you advice that you have to stick with one particular asset, even if you're losing money, but you shouldn't switch the asset. If you are a gold, then you have to stick with the gold, okay? But sometimes I saw, for example, if I'm losing in gold, the way you are saying very tight losses doesn't give you stress and all these things, but in this current situation, if you have the tight stop losses, consecutively 5-6 assets hits and you end up losing like 12% or 15%. So meanwhile, I saw that some other asset, it's falling down very badly, and I see that it's very good buy in that asset as well. And I see that if I go in that asset to buy something, maybe I can get some compensation of my gold losses. So I have to switch from gold toward Nasdaq or S&P 500 just to make myself compensate from the losses which I have in the gold trade, and also to get some good hopes. So what do you think that one person should stick with one asset even if he's losing money, or to compensate his losses from the first asset, he can switch to the other asset as well? Thank you.
Thank you. Very good question. But my other question to you is, will you forever lose money? Or is it just a phase? Is it a learning phase? Or is it you keep losing money? What's the reason why you're losing money? Is it because you're stop loss? And then if you scalping gold these days with Trump market, your stop loss are always going to get hit. Especially if you sit at $2 or $3 or $5 stop loss, or even $10 stop loss. I don't know if you guys have seen gold last week. It was moving $100 up and down, up and down, up and down. It was absolutely ridiculous. I've never seen such a thing like it. It was almost like trading Bitcoin. So why are you losing money trading gold? Because of your stop loss? Are you picking the wrong days to trade?
Well, to be honest, it's not because of myself, it's because of the current market situation. Even if I'm working on my strategy, which worked perfectly for me, but because of the current situation, there is no strategy which is like going successful, okay? So it's because of the outer circumstances I'm getting SLs hit.
Yeah, I would advise you to strongly stick to one asset class or two asset classes. Don't distract yourself with too many things. A lot of people do, especially beginners. When you go on their trading view, they've got euro dollar, they've got Bitcoin, they've got gold, they've got Nasdaq, they've got this, they've got that. You're going to be distracted. You're going to be all over the place. I know one guy from the UK when I first started out. During the pandemic, when we started our company, he mastered cable, GBP/USD, for a whole year, just perfect, mastering the chart. And this guy took his capital, from 25 grand to 300K in 16 months. Why? Because he was just focused on one thing, one task at the time. And us men, man, we cannot multitask. We're not like women, right?
And maybe just to add to that sometime the best trade is not to trade with this market.
Absolutely.
Save your capital. As simple as that. Sometime. Any other question from anyone? Okay, there. The last one, then one last one then.
Hi, as we are talking about AI and everything, I want to know your opinion about like analyzing financial statements and everything with AI. And also one question to add, I need to know more about what do you think about backtesting a strategy with AI?
Can you please repeat the first question?
Yeah, the first question is, what do you think about analyzing the financial statements and everything? We learned the company first, even if it's showing outward, it's performing better, the statements show different. So what do you think about using AI to learn the financial statement? And if you are doing it manually, it would take a lot of time. And what do you think about the backtesting a strategy using AI? And is there any methods? Currently I'm new to the market. I'm still learning. Thank you.
He's new to the market. Well, buddy, good luck. You're going to get punched in the face so many times in this market. Market, look, you got to understand something, guys, especially if you're a beginner. The financial market is extremely, extremely, extremely hard. I don't care what you see on your social media. I don't care about the influencers, posting with Lamborghinis and these fancy watches. The financial market is not going to make you rich overnight. You just got to establish this. You got to ask yourself, why I'm starting trading? What's my motivation? What's my purpose? And the other question is, are you going to stay committed to the plan? Because a lot of people, they're not committed. When they start something, they jump from one thing to another thing to another thing. So that's the first thing. Now, in terms of analyzing statements, there is such good tools like MyFX book. You can link your account there. It's absolutely for free. And it can just give you an overview analysis of the trading strategy, like drawdown, Sharpe ratio, winning ratio, how many trades, winning trades versus losing trades, etc., etc. Those are so great. Just don't use ChatGPT, please.
Yeah, definitely. Thank you.
Perfect. Thank you very much. Now our session time is over. So I would like to thank everyone. Thanks for joining us, and thank you, James, Bentley, and Ahmed, for taking out your time and sharing the insight with us. Thank you all. Thank you very much.